So in this video, we're going to talk about Adobe stock and why I believe Adobe is deeply misunderstood by Wall Street and the market. So Adobe stock is down about 50% from its all-time highs, and it's trading at the same price that it was nearly 5 years ago. And the predominant reason for this decline in overall sideways chop is because the market is worried about AI. The market is worried that Adobe may no longer have the impenetrable moat that it once had. So in this video, I'm going to argue as to why I believe the market has it wrong. I'm going to argue as to why I believe Adobe's moat is deeply misunderstood. So first and foremost, you really have to understand what Adobe actually does. Now, a lot of people only know Adobe as the PDF company, but in reality, Adobe is so much more than that. Adobe's legacy product is the Creative Cloud, which consists of Photoshop, Lightroom, Premiere Pro, Illustrator, and several other very powerful software solutions for creative professionals. So historically, these products have been the gold standard if you are a creative professional. So if you happen to be a photographer, a videographer, a graphic designer, a web designer, whatever it may be, these products have been the gold standard, right? These products have been the first choice among creative professionals. And with the rise of AI, the market is now beginning to ask some questions about Adobe. Maybe some of these users of these products may begin to use, say, ChatGPT to generate a graphic. They may use Gemini to edit their photo, whatever it may be. So the market is concerned that with this sort of inflection point in AI, that perhaps Adobe's products will not be needed in the same way that they have been needed in the past. But the interesting thing about Adobe is despite all of these fears, they still continue to post record-breaking numbers. They are still growing revenue, they are still growing profit, they are still growing free cash flow, they are still adding users. So if you were to just look at the actual raw numbers with Adobe, you will see there has been no decline as a result of AI. So as a value investor, this is the precise kind of setup that I like to see. I like to see a disconnect between the actual underlying fundamentals and sentiment among Wall Street, because you know what? Wall Street doesn't always get it right. Sometimes Wall Street sells a stock because of fears that do not actually manifest into fruition. So when it comes to the AI risk, you really have to ask yourself how legitimate it really is. Now, if you take a step back and you really think about it, isn't it possible that Adobe will begin to implement AI features into their software, making it even more powerful, increasing user retention, user experience? Now, isn't that possible? I mean, that's not really being discussed among Wall Street analysts, right? They're just worried about the AI risk from a macro perspective, but they're not really looking at how Adobe could actually benefit from AI. Just look at Google stock about 6 months ago, right? Google stock was down in the gutter because the market was worried that ChatGPT was going to erode Google's moat when it comes to search, right? People are using ChatGPT to ask questions, et cetera, et cetera. But then guess what? Google improved Gemini, and now Gemini is taking market share from ChatGPT. And because this whole AI sort of narrative is very new, people don't know how to reconcile it. People don't know what the world is going to look like in 5 years. So when you have a company like Adobe with these products, the market's just not sure. There's a lot of uncertainty. The market's not sure where they're going to be in 5 years. So the market is really, taking a risk-adverse side of the trade, which is we don't know, so we're not going to buy it. But the market is really ignoring the other side of the trade, which is, isn't it possible that Adobe could actually benefit from AI? So one thing that you have to understand about Adobe's Creative Cloud products is that they are extremely complex and powerful. And if you are a professional using these products on a daily basis for professional deliveries, you will know that they literally take years to learn how to use, right? They are so feature rich and dense in that regard that you spend so much time, literally hundreds of hours, learning how to use these products because they are that nuanced and powerful. And if you are a genuine professional using these products to make a living, you would actually laugh at the idea of using ChatGPT to generate a graphic, right? You just do not have the flexibility and nuance required for true professional grade work. So when it comes to Adobe's moat, I would almost describe it as a learning curve advantage, right? They have a learning curve advantage because if you are a professional using these products, you will know that it takes hundreds of hours to actually learn how to use these products and all of their features. So if you are someone who has dedicated all of that time to learn how to use these products, the actual switching cost to go to another product is so high that it's really not worth it. So because of that, the ecosystem is extremely sticky, right? Because if you've dedicated all that time and energy learning how to use the products, in order for you to switch to a new product, it's going to have to be exceptionally better to make that switch. So without further ado, let's actually dive into Adobe's numbers and analyze the fundamentals. Also, if you want to stay updated on all things critical, follow me over on X because I share my thoughts in real time. All right, so let's take a quick look at the chart here. And as you can see, Adobe is trading in a bit of a range. So it's kind of established a trading range here. And it's really been trading sideways since February of 2020. So yeah, it's been a tough 5 years to be an Adobe shareholder. You can see that the all-time high was back in 2021. And from those levels, we are down 50%. So, it's been a pretty slow 50% as well. Obviously in 2021, the price went down largely due to the Federal Reserve raising interest rates. So any stock that had a high PE at the time really got hurt. Software got hurt because a lot of the software companies had higher PEs. So they really declined a lot. And then you can see we had a bit of a relief rally, but we weren't able to break those all-time highs. And the stock's been kind of pretty much down only since January of last year. And a lot of this decline has been a result of the AI fears that we talked about earlier in the video. And just, we're looking at what's been going on recently. You can see that we're trading below the 200-day moving average. We're trading below the 50-day moving average. And there is kind of a nice little logical bottom here around the, 280 level, which just from a purely technical point of view, I would not be surprised if we might revisit this level. It's a pretty logical sort of level where you might expect the price to gravitate to. And if a bottom is in the near future for Adobe, this could very well be a bottom zone. But of course, it's these are just the technicals, and nobody knows what's going to happen. But even if you are a value-oriented investor, a long-term investor, you can still use technicals to complement your investing, just in order to get better entries. Because right now we're kind of in no man's land. So even if you are super bullish on Adobe from a fundamental standpoint, the technicals are kind of in a no man's land. So, it is quite possible that you get a bounce here. So I would not be surprised. And, if we do kind of revisit this level, I would almost certainly pick up some shares because you might as well. Okay, so that's kind of the chart. That's what's going on there. All right, so let's take a look at the actual fundamentals. You can see on this chart that we have pulled up total revenues overlaid with the stock price. And this goes all the way back to 2005, which is when they went public, I believe. And you can kind of see here around 2015, revenue really started to almost go exponential. And part of the reason for that is around that time they adopted a subscription-based model as opposed to a one-time fee for their software. So essentially it just made the business more profitable, and it also made revenue more predictable as it was, of course, reoccurring. So another thing here is that, of course, as we just mentioned, the stock price hasn't done anything for 5 years. But if you look at, the revenue lines, you can see that, revenue hasn't slowed down, right? Revenue has gone up every single year, despite the fact that the stock price has gone nowhere. So, and even the last 12 months, right? So the last 12 months for Adobe have been the best 12 months in the history of the company. There's never been a 12-month period in the history of Adobe where they generated more revenue than during the last 12 months. So Adobe's at peak profitability right now, but yet the stock price is down 50%. And that disconnect is, very intriguing if you are a value investor, right? So anytime there's a massive disconnect between the stock price and the fundamentals, you got to start researching really hard, because that could be a very nice investment. All right, moving on to the next metric here. This one is very important, right? This is really the key to the entire thesis right now, and also the debunk to the bearish arguments about Adobe. So we have gross profit margin and operating profit margin. So on the top is your gross profit margin, and you can see from this chart here that gross profit margin has been extremely, well, number one, strong, and number two, consistent. Right, we are running 89.1% gross profit margins, and these margins have been very, very consistent. Right, they've always had gross margins in the mid to high 80s, and you can see here that actually the last couple of years, gross margin has increased. Right, it has not decreased. Gross margin is getting stronger as opposed to weaker, and again, that's very interesting because if you're looking at just the chart of Adobe, seeing that it hasn't gone anywhere for 5 years, seeing that it's down 50% from its all-time highs, you would think that something is structurally wrong with the business. But of course, just looking at gross margins, they're actually expanding, and that's a sign of strength as opposed to weakness. Now, going down to operating margins, which are even more important, right? That gives you an even better idea of the company's sort of health position, and you can see that operating margins are also increasing, right? They are increasing as opposed to decreasing. So again, right, if Adobe's moat was being undermined by the rise of AI and people, dumping their Creative Cloud subscriptions to go and use ChatGPT to create graphics, you would see pressure, right? You would be seeing downward pressure on these margins. But in fact, you're seeing the exact opposite. Margins are expanding, right? One of the quickest ways to determine whether or not a business is in serious structural trouble is by looking at their operating margins, right? When operating margins start to experience decline, that is a good sign that the company is losing its grip. That's a good sign that maybe competition is heating up, for example. But with Adobe, their margins are not only stable, but they are expanding. All right, so how about free cash flow? Now, free cash flow is one of my favorite metrics when it comes to valuing a company, because if there's any metric that'll make you rich, it's free cash flow. It is the production of cash, because when a company produces cash, and when they produce a lot of cash, they can use that cash to buy back shares. They can use that cash to pay out dividends. They can use that cash to fund new acquisitions, right? And Adobe has a lot of free cash flow, which is what you want to see. And also, the free cash flow is going up, right? This chart is up and to the right. Now you can see here that if we look at the last 12 months here, so we also have the next 3 years of analyst expectations for free cash flow. But if we just look at the last 12 months, you can see that it was, once again, record numbers, right? Once again, Adobe posted record numbers on another key financial metric, which is free cash flow. So this was a record-breaking last 12 months for free cash flow production. You can also see that next year, it's going to be kind of flattish, a little bit lower next year. But in 2026 here, you can see that once again, you're at record levels. 2027, once again, you're at record levels. So last 12 months, the cash from operations, so the red line is cash from operations, the blue line's free cash flow. So you can see here that that the free cash flow last 12 months has been $9.6 billion. And in 2027, free cash flow is expected to be $11.381 billion. So free cash flow is growing very nicely, and they're expected to post record year after record year here. So again, where is the decline in Adobe, right? The market seems to think that the stock is dead, that Adobe is dead. But if you look at the actual numbers, if you actually take the time and look at the actual numbers here, you can see that the situation is exact opposite of what Wall Street seems to believe, right? But of course, not a lot of people are actually going to dig this deep, and not a lot of people have the patience to wait for a stock to turn around, especially when it's in a downtrend, right? I mean, the market loves to chase momentum names, right? The market loves to chase stocks that are going up, and if a stock gets left behind, it can get left behind for a long time because it just doesn't have momentum. So another metric that I like to look at is EPS growth relative to revenue growth. So what you want to see, generally speaking, is EPS growing faster than revenue. And the reason for that is it generally implies margin expansion, which is what you want, because that is a sign of a healthy business. So if you look at this chart here, you can see that Adobe is doing just that. They are growing EPS faster than revenue. So if you scroll down a little bit here and just look at these estimates, it's a little bit easier to read than the chart because the chart's a little bit messy. But you can see for 2027, right, analysts' expectations, you can see that revenue's expected to come in at 9.5%, but EPS is expected to come in at 12.6%. So that's 12.6% EPS growth, which is phenomenal, right? Because keep in mind, Amazon isn't even growing much faster than this, right? It's just on top line. Amazon's growing, I think, around 15%. And, that's a very popular stock that everybody knows and loves. But Adobe's, they're putting up respectable numbers as well. So if you look at 2026 estimates, again, top line 9.4, EPS 12.3. So, EPS is very, very strong, and that's exactly what you want to see. That is a sign of a healthy business. So if AI is really a massive threat to Adobe, why have we not seen it yet in the numbers? Because as we just saw, all of the numbers are phenomenal, right? Record free cash flow, record revenue, record profit. The gross margins are ticking up. The operating margins are ticking up, right? This is a sign of a very healthy company. So if AI was really this big risk for the company, why have we not seen it in the numbers yet? So essentially what has happened is the market has sold off Adobe stock simply because of fear surrounding AI, as opposed to AI actually hurting the underlying fundamentals. So now that creates an opportunity, right? Because the market is worried about something, but that thing has not actually happened. Meaning that if the market is wrong, Adobe in this case is primed for a massive, reevaluation to the upside, right? So if the market is wrong and AI doesn't actually hurt Adobe's products, Adobe stock will ultimately have to be priced aggressively to the upside by the market, because the market will realize that it was wrong. And even if AI does eventually go on to hurt Adobe stock, a lot of that is already priced in because the stock is down. It's already down 50%, right? It's been consolidating for the last 5 years. The valuation on a PE basis is the lowest it's ever been. So the stock price is already beaten down. It's already taken a massive hit. And when it comes to the AI fear, again, that's not actually showing up in the underlying numbers, right? So if you look under the hood, AI isn't there, right? It's not hurting the company. So if the market is wrong about AI, the market will have to aggressively reprice Adobe to the upside. And if AI does hurt the company a little bit, a lot of that is already priced in. Okay, so those are my thoughts about Adobe stock. Thank you guys so much for watching my video.